All right, welcome back everyone to this week's weekly recap and outlook. I did a lot of analysis before making this video, and this might be one of the most interesting weekly recap and outlooks that I've ever made. So I definitely recommend sticking to the end on this one. Just sit back and relax, and I'm going to be showing everything that happened this week and a possible outlook for this upcoming week. So with that, just sit back, relax. This is going to get interesting really fast. So first thing I noted, as I said in my last couple videos, is we had this buy model. Now, I've talked about this a couple times, so you already know about this, so don't leave the video yet, because it's going to get really good. But I just want to start from the beginning, right? We had this buy model going into this 6-hour gap, which was also a 12-hour fair value gap, which was also a daily fair value gap. So this fair value gap was the bottom of this buy model. And so that told us that this might be, when we got this reaction and we get this 12-hour CRT off the fair value gap. So a CRT, candle range theory, is when you have a large candle and then the next candle closes back up towards the previous candle. You can expect with a high probability that the third candle will run either to the other side of the range or at least to the midpoint of the large range candle. And you can see that that's exactly what happened here. And it's especially nice because we were reacting off of this fair value gap here. So you can see that we had actually a pretty clear midweek bullish reversal weekly profile where the bottom of the week, it wasn't on a Wednesday, but it was pretty close to Wednesday. It was on a Tuesday where we went up and we chopped around and we pushed down into that fair value gap. That was that daily fair value gap, that 12-hour and that 6-hour fair value gap. And the rest of the week we expanded up to our draw on liquidity, which was all-time highs. So we didn't really have any other draws on liquidity besides all-time highs. This was the main draw on liquidity. So right when we reached it, the market pretty much chilled out a bit. So that was this past week, right? It was a pretty clear midweek reversal profile coming off of that fair value gap. And then once we reached that objective, we were essentially just consolidating a little bit. We had our objective hit, so there wasn't much further that the market needed to go. Now, I will say that I measured this out in my last video as well, but if you measure out the standard deviations of this, check this out. Your 2 to 2.5 is measured up to be right around here. And something else I noticed is that we're getting two different SMTs. We're getting SMT with this high. We're getting SMT with all three of these highs. So here you can see this with S&P here on this chart. So we have, just to show you what I'm talking about. So we have a high, a higher high, a higher high, a high, a lower high, a lower high. So you see this where the S&P is making lower highs, the Nasdaq's making higher highs. That's your two different SMTs. So SMT with all of these highs. So I'm gonna mark that out right with this. And then we also had this SMT. So I guess it's like the same SMT, right? But I just want to mark it out as two different ones, right? Because you have, yeah, this one and then also specifically these two. You'll also note that we've swept, so we swept out all-time highs, and then we swept it out again. At this point, we did get a 2-hour change in state of delivery. That's important or worthwhile to note. One of the main reasons we reacted right here where we did is we actually had the new week opening gap right here. And I was talking about this on Thursday, how we might draw back into this new week opening gap and get a trade off of this. And I'm not sure if you watch any of you guys watched my video on Thursday, but there was this really beautiful, beautiful trade coming off of this new day opening gap here. I mean, it was like, it doesn't get more pretty than this. This was awesome. And so clear A, M, D, where you have accumulation, manipulation into the new day opening gap, and then up to data high. So this was a new day opening gap and a new week opening gap. So pulling back up the chart here, you can see this was a new week opening gap, but then also a new day opening gap. So you had both. So anyway, the week closed bullish, and you can see that makes sense in the context of the weekly profile, because this would be a bullish midweek reversal. So the candle should look something like this, and it kind of does. So that mostly covers it for this past week. I think that's about it for this week, but it's going to get really interesting. So definitely stick around to the end, because there's a lot more to talk about. Okay, I think that about covers it for this past week. So now let's get rid of all this extra stuff on our chart here. So now let's keep this 2 to 2.5 standard deviation and these SMTs, and let's talk about what could actually be going on. So one thing you'll note is that we have, first of all, a volume imbalance right here. So a volume imbalance will act as a draw on liquidity as long as there's not a candle body laying over it. So here you have the volume imbalance here. So that this is on the daily chart, right? So as long as there's not a candle body laying over it, it will act as a draw on liquidity. That's different than a new day opening gap, because new day opening gaps, they work no matter how many times they cross over it. There's support and resistance levels and draws on liquidity. Specifically, the volume imbalance, I see this as a draw on liquidity. And you'll also note that, guess what's right here? This is previous week's low. That's a pretty significant draw on liquidity as well. So let's mark that out. So we got previous week's low. So you see how this is the low of the previous week. So your highs and lows of higher time frame candles are significant draws on liquidity as well. Then you'll note that we also have, check this out, we have a new week opening gap down here. So these act as a draw on liquidity as well. So pulling this out, here's our new week opening gap here. And then check this out. So we got both those SMTs, right? Also, it's important to note that this is a liquidity void. These act as a magnet as well. So the market likes to come back in and fill these liquidity voids. So let's mark this out. So we got liquidity void, previous week's low, volume imbalance, and then the new week opening gap. So let me get my little picture here. Okay. Now take everything I'm saying with a grain of salt. I'm still getting better at trading. Just understand that every week we're all going to get better together. And it's a learning process. Every single day is a learning process. But what's crazy is if you measure out the standard deviations of this final move up, this is the clear final manipulation move before we get this move down and this changes to delivery. This is the final manipulation move. Check this out. There's that final manipulation move. Yep. And what do you get? The 4 to 4.5 right around the new day opening gap. Yeah, I believe this is right. It's measured right. Yeah. So I'm going to mark this out as the 4 to 4.5 standard deviation. So I found that to be pretty fascinating. So you have all of these different things possibly acting as draws on the market, and then the 4 to 4.5 standard deviation lines up with the new week opening gap as well. And so with these two, you have two different SMTs, right? You have the giant SMT and the lower time frame SMT, and that says a lot as well. So I also think that if you think about it in the context of AMD, right? Like this could be your accumulation right here. So you got accumulation. This could possibly be your manipulation. So accumulation, manipulation, and then possibly distribution down to all of our confluences here. So as well, check this out. You measure out this standard deviation. Guess what you get? The 2 to 2.5 lining up with this high as well. So here's the 2 to 2.5 of this move. Measure out this one. What do you get? That one's not the best example, but I don't think that's the best manipulation leg either. And so the point I'm trying to make is that there is a lot of reasons to possibly have a shift back down to take out this liquidity here, because you got all the people that bought in this range. If the market comes and runs down and distributes to this low, they'll all get stopped out. And you have two giant SMTs going into this week. And you'll note that this is also overlapping with our weekly order block. So it's not to say like this has to be the all-time high top. I honestly don't think it is, because you measure out standard deviations, it shows that we could probably go a lot higher in a lot of cases. But here you can see this weekly order block is around this area as well. And this would also be a weekly fair value gap. So very interesting. Take what I'm saying with a grain of salt, because I'm just trying to get better, but these are all things that I noticed. And if you think about it from a CRT point of view, you have you have one sweep, two sweeps, so it's two sweeps, and then I honestly see this as a wick above, and then they close back in the range. So I could see us targeting this, which would be the CRT low. Now, I'm not exactly sure, because it's not the most obvious signature in price, so I could be wrong about that, but that's just my thoughts. Let me know what you guys think in the comments below. But yeah, it is pretty interesting how everything kind of lines up the way it does. So one possible outlook I could have is maybe we could pull up the new week opening gaps. What I was thinking is, so since this new week opening gap is aligned with all these other confluences, right? I was thinking maybe push down, maybe retest this, which would be retesting this old low here, and then we get that final sell-off down to that 4 to 4.5 standard deviation. So you maybe get support at the 2 to 2.5 standard deviation right here, so measuring this out. There we go. That measures a little better. I was no, it's about the same. But you see this 2 to 2.5. So this is something I could see, right? Where you get a move down to this 2 to 2.5, a move back up to this new, what is this? Weak opening gap, and a final move down to this 4 to 4.5 standard deviation. So that's all totally speculation. Please take this with a grain of salt, but this is just like, the idea with this is as we do this every single week, we'll just keep getting better and better. So just take this with a grain of salt, but like this is just like me trying to get better and get my best outlook on the market that I can for this upcoming week. So if we get some new information where we form bullish SMTs, we hold bullish PD arrays, then I will change my bias. But for now, it looks like we're disrespecting this hourly order block here. And we got these SMTs. We've swept out buy side multiple times. So I'm just looking at the market for what it is. To me right now, it looks like we're going to go run the lows of this accumulation here. That's just me trying to objectively look at the market. And then when it tells me something different, I will be open to changing my bias. But that's what my bias is right now. And yeah, we'll just keep getting better and better even if we're wrong. So, or if I'm wrong, I'm the one doing the analysis. So we'll keep getting better if I'm wrong. But that about covers it for the recap for this week. I will see you guys in the next one. Bye.